And so I'm privileged because I have Rebecca and Joe who will be joining me for this panel. They are experts in their field, Rebecca from a legal perspective and Joe from a financial perspective. And if they weren't here, they would likely be on CNN, CNBC, Fox News. They are continually asked for their advice and expertise. And so I'd like to invite them both to come join me on the stage. And we're going to have a little bit of fun, too. I think you both probably, having been asked to comment a lot, are tired of saying, it's unprecedented times, right? We're over it. I think we can agree at this point, constant disruption is essentially the landscape that we face. And it's not really about, is change going to keep coming? Are we ever going to get to certainty? It's how do you build wealth and protect it? In this era. So we're going to cover a couple of different instances. One, how to get into the U.S. market. Once you're in, the way to build your business and protect it. Some lessons learned. And then finally at the end, we're going to pull out a crystal ball. I'm going to ask you both to predict what's going to happen in the future. So you've heard it here first. So I think actually there are probably investors in the U.S. who would love to be part of this discussion as well. So Rebecca, I'm going to start with you.
Great.
And one of the questions that I'm confident is not just on my mind, but everyone else's, is some first steps in getting into the U.S. market from a legal perspective. What would you say are some of the right first steps to take?
Okay, so from a legal perspective, the first thing we're going to do is talk about how the investor in a foreign country, Romania, is going to organize their data.
Okay.
That's very important. So you want to know how to define your investment goals. You want to define your investment strategy. This is going to be important. When you have the goals and also your partners, then you're going to come to America and find the people you want to work with. And it is imperative that you have a legal team, a team of tax accountants, a team of lobbyists. Everyone has to be set and ready before any money is sent over to America or before you structure a corporation in America. These are choices you can make, but those things have to be decided with your team in place first. The American team will guide you because our regulations are extreme.
No.
And as you'll see from when we do predictions, change is the constant now in America.
Yeah.
Because we have an administration that has an agenda on protecting America. There is so much change happening. You want to make sure you have a team in place. Once your team is in place, your lawyers, your accountants, your lobbyists, I always suggest to my clients that there is one person in that team that runs the team for you. What do I mean by that? I mean the transparency and the communication between you as an investor or your company as an investor and your professionals has to be impeccable. The only way you can get really very good advice on how to navigate within this country is having a very good relationship with your team.
Right. I think that's going to be part of the theme of this discussion, right? The relationships you build. So Joe, from your perspective, first steps, thinking about it, and with financial players looking for foreign companies trying to attract capital in the U.S., what are some of the things that they need to think about?
Sure. And before I answer that key question, I just wanted to thank Forbes for the opportunity to be here today, and especially appreciate my former student, star student Maruna Constantine, putting forward my name to join you. So it's a pleasure to be with you. And as a former history major, I just wanted to say congratulations to everybody in the room. I remember a time where the entrepreneurial spirit, which is so alive in this room, was not allowed to be accessed by Romanians. And so it's wonderful, just in the brief period of time that I've been in your company, to witness that entrepreneurial spirit. So congratulations, and it's an exciting time to be a Romanian entrepreneur. So I just wanted to.
So how are we going to help them?
Yeah. So how I can help them is I had a 32-year career in the investment management industry, where I was managing billions of dollars for our investors, our shareholders. So what I can provide now that I'm in retirement is a potential institutional U.S. perspective on how to build a long-term successful partnership with your long-term oriented investors. And so I would guide you to understand that in the U.S. investment landscape, there are many different perspectives. So what you need to do is figure out, who do you want to be your shareholders? Who do you want to partner with? Simona talked about the importance of relationships, and it's come up several times. Yeah. I can tell you institutionally, when we look at companies, when I looked at companies to invest in, it was a partnership mindset in that we were going to be investing for the long term. It wasn't a trade. It wasn't attention deficit disorder speculation. It was a long-term oriented investment. So making sure that you have that long-term compelling risk-reward proposition that you can provide to long-term oriented investors who are going to be with you during the good times and the bad is critically important for long-term success. And I would say with the G7 economies and markets and China thrown in being kind of the governing forces to the global marketplace, there's some challenges that are coming down the road that I think that we're going to get to in this conversation, which at times may turn off the faucet to the capital markets for a lot of people to access. So it's critically important that when you go in to talk to institutional, long-term oriented U.S. investors, that you're not only able to offer up your solution set and your compelling expected return risk-reward proposition to a long-term investor, but you need to be able to articulate how you're managing your risk. So it's not, you can't have a damn the torpedoes approach where you're just talking about the unlimited opportunity and upside where you don't control the flow of the global capital markets. So that would be, on one hand, entrepreneurs say it's okay to be naive to risk. I can tell you that an institutional portfolio manager does not want a company who is naive to risk in front of them. So making sure that you have margin of safety in your story and how you can continue to come forward with a compelling risk-reward proposition to your investors when the markets aren't going your way is critically important, because those long-term investors, provided you have been executing on what you told them, will be there for you whether the capital markets are supportive or not supportive, because that's when you can make your best money as an institutional PM, is when others can't invest. So again, having a compelling risk-reward proposition and also sharing how you're managing your risk is really important when you're talking to institutional investors.
So one, I have to say thank you for bringing him out of retirement and submitting him. I think it's super, because that's such a wealth of knowledge. So let's get into that a little bit, though, in terms of what are those strategies to not only help mitigate the risk, but to build that long-term wealth.
Yeah, great, and we've already touched on it, and I managed very volatile asset classes. So one, asset allocation is critical for an institutional portfolio manager, and from my standpoint, I turned volatility into a friend. Most people treat volatility as something that they want to run away from. I looked at it as an opportunity, especially as we were long-term oriented investors. I could take advantage of volatile marketplaces. And when I talk about volatility, everybody loves volatility on the upside. No one loves volatility on the downside. But the volatility on the downside is the greatest opportunity for long-term oriented investors. And that's where the partnership with companies that are built robustly with an eye towards the upside, but also managing the downside comes into play. So creating an all-weather company is a really important thing, but I would hope for the best, manage for the worst. And I think managing volatility and risk management is not the glamour part of what you do, but it's a critically important part for long-term success in building a company that is meant for the long term. So I think that's a key aspect.
I love the fact that you were overseeing both the volatile markets and gold at the same time as part of your role at Fidelity.
Yeah, I never had a dull moment. So, so when you're working at one of the largest financial institutions in the world and you're running a product that's effectively a financial asset insurance policy,
right?
It was an interesting position to be in as running the manager of the gold fund at both of the firms that I was at. So, if you didn't learn how to manage volatility, you had a real problem in my space. So luckily, I came up with a philosophy and a process that enabled me to take something which everybody runs away from, and I ran toward it because I had competitive advantages of long-term partnerships and an understanding of the marketplace that I was investing in that was able to provide upside for my shareholders when the space was running, but also outperform in the down markets. And basically, that's what we tried to do.
It's probably hard to be in retirement now, given how gold is. I'm sure have people every day.
Well, just
saying,
because I'm retired doesn't mean that I'm not participating in the gold space. So far be it. But that's part of a diversified portfolio, which is, so I'm giving you an institutional portfolio manager's perspective, but at the same time, I manage our family's portfolio. So I think critically important, whether you're running a company or you're managing your own portfolio, asset allocation is the key determinant on long-term investment success. That means not having all your assets in one particular asset class.
Right.
Being diversified, having a little cash when you need it for those opportunities when volatility swings your way, and staying long-term oriented. That's the key thing. Most people make detrimental investment decisions because they let the emotions and the volatility get the better of them. So making sure that you are set up with a philosophy and process, whether personally or professionally as an institutional portfolio manager, that will allow you to take advantage of that when other people can't, will keep you in the game. We used to say asset allocation gives you diversification and ballast for turbulent markets. And again, I think the G7 and China have some major structural issues that they're going to have to come to grips with over the next 5 to 10 years. They're going to cause a lot of gyration potentially in the marketplace. So being aware of that as opposed to pie in the sky is probably a prudent strategy.
Right. Well, Rebecca, I want to get to you because I'm confident you've got a lot of insights on what are some of the pitfalls that investors typically make in entering this market.
So in entering this market, for the most part, I represent very large real estate investors, high net worth within this country, and sovereign wealth funds that invest in real estate. And when we're looking at a real estate investment, or really any investment in the United States from a foreign entity, the two biggest pitfalls are, again, the regulations. Aside from the regulations in bringing your money here, there are many regulations that this country enforces very strongly, and we're seeing with this administration a further step into a very tight and focused ability for this country to regulate investors. So what I'm saying by that is there are tax issues. In this country, we have a very structured tax and revenue stream that the IRS, that is our Internal Revenue Service, imposes upon all investors, foreign and within and domestic. If you have money coming in, if you create a domestic corporation, all of these rules have to be followed. If you do not create a domestic corporation and you're a foreign investor in America, all of these rules have to be followed. So that oftentimes is a pitfall.
Right.
I'll see different investors from foreign depending, a sovereign wealth fund, an individual investor, who may not recognize that the IRS and the tax rules apply to them as well, even if you don't have a domestic corporation. Then we have some regulatory compliance, the biggest of which I would say, pitfall, is the Foreign Corrupt Practices Act. In America, we have a very strong legal area that focuses on what we deem to be corrupt practices. In many other countries, these are not practices that would be deemed corrupt. So giving gifts could be seen here as a bribe, whereas in another country, a gift is a cultural and appropriate way to do business. So these sort of pitfalls can create not only civil issues for you, but criminal issues. And the biggest way to avoid that is, again, what I call transparency, trust, and communication with your team, whether it be your attorney, who's the head of your team, your tax preparer, your accountant, even a lobbyist. If you have to be transparent with your team, you have to have trust in your team. As an attorney, I am obligated ethically to my clients. I cannot reveal information to any government authorities with very few exceptions. So I engender trust and communication with my clients. So they tell me things they plan to do, things they want to do. Now, this sounds very basic, but it can be extremely detrimental to a business, extremely. And you can avoid pitfalls very easily when you know what the pitfalls are. Coming from another country, the legal system here is, I'm not doing this to sell myself, I'm saying it is extremely intense and very, very hard to navigate.
Yeah. Can I just add on to that? So one of the firms that I worked for probably had as many attorneys there as there were portfolio managers.
Yes, exactly.
So the investment management industry is a regulated industry. And so I used to not only go to all the meetings that I was hosting with all the companies that I was invested in, but all the emerging market meetings and other meetings that my colleagues would host. And the quickest way to lose an audience at an institutional firm is to whiff of something that wasn't best practices.
Right.
And so, because from a risk-reward standpoint, as a portfolio manager, that's a no-go. So, and we're trying to calibrate the upside, downside, and if we don't trust the person who's sitting across the table from us, or we think that they are doing something that is potentially illegal, not only are we going to run in the opposite direction, but we're going to call our compliance department immediately and report what we have just witnessed. Because the downside is beyond the downside just for me as an individual portfolio manager. It's reputational damage to the firm, which is unacceptable. So in every meeting and at Fidelity, we had the ability to meet with everybody in the world that we chose to meet with. And oftentimes, everybody in the world would come through our offices in Boston, and we had an open meeting policy, so you go to the way the meetings flowed would be you would come in, you would talk to a team of potential investors at the firm, and if we have met with you before, you will be checked relative to what you said the last time we met with you. And our notes will come out, and we will be reconciling what you're saying today versus what you said last time. Are you doing better than you said last time, or are you doing worse? What's the reason? And we're looking for the consistency of messaging and execution. And any deviation of that is reason for us to question the relationship of being a long-term investor with the company. So the quickest way to turn us off is to do something that is not consistent with the message that you've relayed before, or to do something that we deem to be inappropriate certain from a legal or a regulatory standpoint, that we have zero tolerance for.
And something, Rebecca, though, that you said, so thank you, because I think that's great insight, but Rebecca, you said something that I think is really helpful for this audience to hear is sharing what your long-term vision is.
Absolutely.
Early. I'm married to a lawyer, so I know oftentimes business owners are looking to shortcut, what's the easiest way around something.
Not within the
Sharing that
United
long-term
States.
vision allows your lawyer, your legal team, to be your partner.
You
through
have
that.
to have a partner with your legal team, because not only could you face in this country civil penalties, there's a tremendous downside to the criminal penalties here.
Yeah.
And unfortunately, I've seen it with clients coming to me too late, where the investigations start with some civil information and then it turns to criminal. Because laws are so different here and so structured than in many other places, oftentimes the investor won't realize that some
Right.
of what they're doing is deemed criminal in the United States.
There are no
Right.
shortcuts or deviations to long-term success from a U.S. investor standpoint, so
Right.
don't go down that road.
Well, it's not even sometimes it's not a shortcut. Sometimes it's just lack of knowledge. I'm not going to call it ignorance. It's lack of knowledge. It's applying the thoughts from your country, the legal process in your country, to this country. And there is nothing like, good or bad, there is nothing like America. There's great upside here, of course, for financial recoveries and rewards, but you really have to follow the rules, because if you are found on the wrong side of the rules, the downside is dramatic.
Right. Right. So maybe let's get into some like practical applications of that. I'd love to hear, you've done a lot of cases. Can you give us an example of one where the legal actions taken really helped dramatically in terms of the investment?
Yeah, we're going to shift a bit away from the criminal.
Let's focus on the investment
Yes,
piece.
because so this lesson I have a sovereign wealth fund from a country. They're a client of mine. They have been longstanding for over 10 years. And this country was found in the first go-around of President Trump, his first term, which was 2016 to 2020. The country found itself on a list of adversaries. And the administration defined adversaries as people, countries, systems that were not consistent with the ideals of the United States. Well, fast forward 2020, Joe Biden takes office, and this sovereign wealth fund invested in America regularly, mostly real estate, other things. As the 2024 election was coming up, I sat with my client, who I met with regularly, and said, the polls are showing Joe Biden's going to win in certain places, but I'm at Fox News often. Our polls are not showing that. They're showing President Trump is going to win, and he's going to win by a landslide. If that's the case, we have to take action now. Yeah. Because if that's the case, the only way for you to continue investing in America will be with money you already have here. He's already stated that the country that the Sovereign Wealth Fund is part of has become more of an adversary to him and his ideology than previously. You know, predicting this can only help. Mm-hmm. So what happened was my Sovereign Wealth Fund divested from long-term projects to the extent they had to, brought as much money in as they could early, but knowing that there's a possibility for 4 years money would be halted, the money that came in had to cover the rest of the 4 years. Different development deals, different deals that would require capital contributions over the course of time had to be divested from. As we found, he was elected, and he did institute an extremely aggressive policy on America First, and this country is on the list of adversaries that cannot do business right now in this country. So not only did we avoid a pitfall of not having enough money, we avoided the possibility of a very dramatic loss of money. If we had entered into development projects early on that would have required money up front for a long period of time, we would have entered into tremendous litigation and lost all that money.
And what I love about the story is the importance of when you're looking for partners here in the United States are those who have the knowledge to help you scenario plan, anticipate.
Yeah, you have to.
Because with so
That's
much
my
uncertainty,
obligation
you
with my client.
absolutely can't predict. So Joe, would love to hear your thoughts.
Yeah, I would echo all of that, and I would say one of the things that we used to look at closely are who are your other shareholders. Who you know, because if you're taking advice from people who are aligned with you and consistent with how we thought about maximizing shareholder value, evaluating management had a couple of dynamics from our standpoint. One, we wanted to make sure that you had operating acumen, that you were that you had a vision of where you wanted to take the company. But then we wanted to see, what is the depth of the management team? Because often with founding companies, you have key man or key woman risk. Okay, that's not a good thing. So we wanted to evaluate the breadth and the depth of the management team. And then we look at the proxy statements. And we look at the proxy statements for one determination. Are the incentives which drive the bonus of the management teams aligned with shareholder value as we deemed it appropriate? And that is something that got tremendous scrutiny from us. And again, we just want to make sure that we're on the same page. Now, the challenge in the U.S., and this comes to the importance of having a good team guiding you, is if you try and make everybody happy, it's like a dog chasing his tail. It is not going to go well. You have to be very discriminating as to who you want your long-term partners to be. You need to seek out those companies that have an investment horizon that is consistent with how you want to run your company, and then you seek advice from those partners. If you disregard the long-term oriented partners, shareholders that you have, and you turn to, say, short-term oriented investors or the investment banking industry, that doesn't go well, right? Because they are not typically the shareholders that are consistent with, well, investment bankers don't typically own the stock they're advising on, right? So that was something that companies always struggled with. I said, if you have a question, why don't you call us? You know, we'll give you our perspective. You can listen to it. You don't have to do it. You know, we're giving you an honest assessment of what we think would be best practices, best road forward. When they had questions and they turned to somebody else other than us, it was a real head scratcher, and it was a disconnect, and that wasn't good. It was kind of an indictment of the relationship.
And what I love about just this dialogue period is one of the greatest shields to protect your investment is knowledge. Knowledge is what will help you to navigate that level of uncertainty. So we're going to get into our
communication.
Absolutely, absolutely. So now we're going to get into the predicting the future part. Would love to hear first, Rebecca. You've already painted quite a complex picture of what it's like to work in the U.S.
It's navigatable. You just have to know what's happening. So a future prediction for Romania, it's excellent. So Romania is an ally of the United States, and this president and this organization has decided that Romania, as well as other allies in the European Union, will be fast-tracked. So investments are fast-tracked. That doesn't mean it's a free-for-all. That means that investments from Romania, which is deemed a very important ally to the United States for very many reasons, will have a different review process than other foreign countries. So investors coming in will have a different review process, but they will be reviewed. And they're reviewed by what we call the Committee on Foreign Investment in the United States, CFI-US. When these investments are reviewed legally by CFI-US, the very big point for Romanian investors coming in is, who are your partners? If you're solely a Romanian entity, no problem. If there are any connections to adversaries, and the adversaries have been very strongly defined as China, Iran, Cuba, North Korea, Russia, and Venezuela. If there are any connections at all to any of these countries, you will not only be taken off the fast track, you will be subject to intense scrutiny and possibly blocked entirely from investing in the United States.
And I love you've done a great job of carefully choosing your words, right? It's not a matter of whether we like this or not. This is the reality, and here's what we need to be thinking about.
There's no place for me to discuss any political likes or dislikes.
Right.
We have to look at the reality of what's happening. Romania is in an amazing place with the United States in terms of an ally. But if you are Romanian and have partners from other countries that are perfectly legal in Romania.
Right. Good advice.
Here, possibly not. And the possibility of having these partners could subject you to a complete block of bringing your investment dollars into America. And that's not necessarily what's going to happen, but you will have a very strong review.
Got it. Thank you.
Sure.
Joe, what are trends on the horizon?
Okay, and we've teased some of this up earlier, I think. The most important thing that I can share with you is the big event which the entire investment management industry is turning towards as we speak. And that is, over the next 20 years, there is going to be the largest transference of wealth the world has ever seen. So there is expected to be about $80 trillion change hands over the next 20 years as the baby boomers, which I will, full disclosure, I am one of, exit stage left to hopefully a better place. But that $80 trillion is going to change hands. That is not a small event. It is a huge event. Now, it's coming against the backdrop of a world that is more likely to see inflation as a problem as opposed to deflation. And there's some significant contributors to that, which we can go into if anybody's interested, against the backdrop of below average real economic growth. Okay, so higher inflation automatically lowers real economic growth against the backdrop of record debt levels. Okay, so there's a point coming down the road, and I kind of talked to the volatility that's coming, and a lot of it centers around the demographic, the baby bust in the G7 economies and China, against the backdrop of the boomers exiting with record amount of debt and an inflationary backdrop. And this is one of the things that I think the market is articulating an opinion on in such asset classes as crypto, gold, and other asset classes, is the worry that nominal growth is being pursued at the expense of real economic growth. And that the real economic growth is not at a run rate which is going to enable countries to service their debt. And that is a key concern. In the U.S., for instance, in the next 10 years, the amount of outlays that are spent on the entitlements and defense will take up all of GDP. That's not sustainable when you've got our record debt levels. So the issue is, unfortunately, I've watched this play out. It started after 9/11, but there has been a shift from what should be driving real economic growth, which is fiscal policy, to monetary policy. Monetary policy does not drive real economic growth. It is a end run when fiscal policy is being compromised that does not engender or allow real economic growth to grow. If you look historically over time, it's fiscal policy that enables real economic growth, not monetary policy. When you use monetary policy as a as a running around backhand approach to the impotence of fiscal policy, then you run the risk of inflation spiking, debt levels getting out of control, and all sorts of very, very significant problems. And the issue here is the U.S. dollar is the reserve currency of the world. The U.S. is 5% of the world's population. It contributes a third of the world's economic growth, and it has over 50% of the world's wealth. That's only 5% of the global population. And that's the importance and the power of the reserve currency status. So the ability for the U.S. to take appropriate action to demonstrate to the world that it has an answer to these big structural challenges that are not unique to the U.S., but they're unique to the G7 and China, is critically important for a global financial system and global investment markets to be supportive of growth. But you can't allow somebody to con you and focus on nominal growth. Okay, watch the nominal, but don't pay any attention to the real, because we all live at the real. So you have to watch if countries start pursuing policies that try to get you to focus on the nominal and they don't reconcile to the real, because here's the issue. No two countries on this planet have the same definition of inflation. Every country defines inflation differently, they measure it differently, and whether they actually report it consistent with the consumer's own experience is subject for debate. So you have to worry significantly about the real economic growth. Don't be fooled by the nominal. Keep your eye on the real. The markets will respond because the markets aren't fooled, right? And they will react. And so that's a big thing that you have to keep in mind.
It's, yeah, keeping that long-term view. Well, I can see why both of you are on the news a lot. You've taken some really complex topics and simplified them in a way that I know is helpful for the audience. And I want to say a couple key takeaways that I had. One, really making sure you've got the right partner here. Choosing a partner who will not only do that scenario planning with you, but anticipate some of the friction that you might face. And then for you, as the investor here, to be transparent, to communicate your long-term vision, to make sure that the things that you're doing in the short term are building towards that longer term. And then lastly, and it's why I love that Forbes puts on these events, knowledge is power. That's your shield against uncertainty. So if everyone would just join me in thanking our panelists here.
Thank you.